Good morning. Good morning. How was the weekend? All good? Hey, Raj. Badir, George, Jerry, Moran, whole crew's here. What's up, Ian? Mine was good. I've just been trying to get rid of this cold. Every time I seem to get onto an airplane, it happened last time too. Every time I get onto an airplane, I get sick. It's brutal. I'm gonna have to be like one of those mask people that annoy everybody. Oh, man. How's everybody doing? Welcome to the folks on YouTube. Good morning. All righty. All right, let's see what we got. Yeah, it's really weird. So, yesterday, I went and posted this in the room. Hang on, I'm just gonna, if you don't mind, I'm just gonna drag this over. Yesterday, before Globex started, I dragged this into the room and I said, if we don't break 77.60, we're just gonna go back and forth here. Now, how did I know that? Right? The reason I knew that this was going to happen was this is the inventory underneath. There is a short position. There's a short position right underneath 77.60. Some of that got filled in the last prior sessions. This is an RTH and a Globex. That sucked up all the inventory from above. Okay, so what happened was the liquidating inventory went into these wholesale hands and short covering and then poop, right back up. So what I said is if we don't break 77.60, we'll still be in distribution. Now what I want to show you today is how to tell distribution from looking at a chart that is not a TPO chart. I'm trying to do a video to show you guys how to use candle charts to help you mimic the same stuff that you get off a TPO because they're basically the same, right? But if you get to see inventory on any kind of chart, it's going to help you make decisions better because you're going to know where the heck to be interacting with the market. Am I buying this at a discount? Am I buying it at an inflated price? You're a trader, right? A trader means that you're not, doesn't mean that you're looking to buy a moving average or using an indicator. A trader means that you understand the price of the goods that you are trading and that you can effectively buy and sell those goods for a profit. Does that make sense? Do you guys understand? Oh, is that Harry? How you doing, Harry? Feeling better, right? So it's essential that you folks know where your goods are priced. Otherwise, you're doing business all at the wrong place. Sound familiar? Shorting at the lows, buying the highs, right? Right? Nothing to be embarrassed about. We've all made these same mistakes and we've all had issues until somebody explains it to you clearly, right? So we want you to be able to make money by knowing where the market is is priced. So I did a couple of things, right? One is to show you this. And then if we go and take a look, stay with me. You'll see tonight our low is 77.63, right? Our low is 63. And here's the overnight. It's going back and forth in Friday's range. We did a little look above, and now we're back inside Friday's range, but we're still in distribution of that product that was here up here. Now, how do you see that on a candle chart, right? Well, here I left. This is the balance zone from Friday. Remember? This is why I haven't done a new balance zone, because I wanted to show you guys. I want to show you guys how you can see distribution. Here you see Friday's accumulation of cost basis right here. And then, hang on, excuse me. Right, you see that Friday here's the accumulation, distribution into 4 times, almost 8 times, and we're still distributing, right? So the cost basis from Friday is here, and we are still making sales higher. So that's a really easy way. Then take a look at the candles for the pretty much the whole night session, except for this little bit here, has kind of been a steady march up. Look at this, right? Sideways, up, sideways, up, sideways, up, right? And then we get a liquidation. And guess where we go on liquidation? Right back to the last little cost basis. Do you see that? Now, what does cost basis mean? It means how much you paid for your stuff. So if you go sideways for a while, right? If you take a market sideways, that's a cost basis. You go and you sell it at a profit and you put it on sale when you have to, and you come right back to the cost basis. It's really simple. They have overcomplicated, they have taken charting and they have prostituted candlestick charting and all kinds of charting to the point where people are so confused with so many different indicators and patterns and all sorts of crap. They have no idea that the business behind it has been lost. Right? It's like the lost symbol, right? I feel like, I'm Dr. Robert Langdon looking for the lost symbol, in the Da Vinci Code or something. They have totally prostituted retail trading and confused people. All you have to do is look at a chart and go, oh, where did they buy this crap? Oh, are they selling it at a premium or a discount? Okay. If they're selling it at a premium, I don't want to buy it at a premium, so I'll wait till it goes on sale. Right? Make sense? They say buy low, sell high. How do you know when to buy low? You know when to buy low when they put it on sale, right? So we use the chart to do that, but we use it intelligently so we can manage risk. So right now you can see that there are bids here at 77.84. So common sense, if you went long 85, you'd put your stop under 84, and you know that there's going to be sellers at 87, and you know there's going to be sellers at the top of all of these candles on the way up. So if you are long, you put your sell orders there. If they don't get executed, you get out of your trade here. It's really simple, right? It's very, very simple. You don't have to overcomplicate this to make money, right? How do you tell they're sellers? Golly, look. Look at the top of those candles, right? One, two, three, four, five candles with the exact same high. That means they're selling at 77.87 and a quarter. It is as obvious as the nose on your face that they're selling and competing there because price is going down. How would you trade that? Well, if you were long 85, you'd be selling 86, 87. Make sense? And if you're short 87, 86 and a half, your stop would be 87 and a quarter. And where would you cover? You'd go put some bids in here. See? Simple, right? All you have to do now is practice at your execution, right? Once you got your analysis, oh, are they in accumulation? Are they in distribution? Are the candles big? Are the candles small? Is the market moving fast? Is the market moving slow? Right? Where can I make money without putting my entire account and mental health at risk? Right? Look, the offer is here at that white line. They're competing there again. The offer just moved down. Check it out. So that seller at 87 quarter is still present. And they are competing with the other sellers and pushing price down. When they get down to 86, magically there are bids there. So let's see if we can lift price over 87 and a quarter, 87 half. Oh, the overnight level? It just tells me how business is going. Is this the Harris that's in my room, right? Or is it another Harry? It just tells you how business is going at night. So you mark the overnight high to see whether or not we've taken out the previous day high, which we did. So for a brief moment in time, prices got above the range of Friday. Does that make sense? What you're trying to do is you're trying to be aware of how price is being received. You know what I mean? Say, Harry, you were log here, right? And you've got some sell orders here. If they're buying this, that's great. But if you have sell orders up here and they're not buying it, then you got a lower price. Make sense? It's real simple. I guess you're not the Harry in my room. Is this the doctor from? No, I don't think so. He's not responding. I guess it's not him. Look, there's going to be sellers at the top of every candle. Pay attention to this stuff, guys. I'm telling you, you want to make your life easier. Now you can see that they see buyers, they raise price, right? Harry, did you understand my response? Folks, do me a favor. I have a cold. I'm not feeling well. If you ask a question and I answer the question, let me know if you heard the answer or if I have to repeat it. Do me the courtesy of saying yes, thank you, or no, I don't understand. Okay? There you go, Ian. Oh, and Ian, I saw what you wrote in the room, right? I have a solution for you. I actually have a student of mine who did that 4 years ago, and he ended up trading away $6,000 that night. Woke up the next morning, didn't even realize he had done it. So we should talk. Okay? Yeah, it's good that it happened before you lost a lot of money. Yeah. So what we're looking for also is we're looking to take the cost basis here from the overnight and shift it up here. What does that mean? Right? Everybody talks about the point of control moving up. What does it mean when the point of control moves up? It means we've taken this cheap crap and we've sold a good amount of it up here. Make sense? Good. So you see the sellers are still active at 88, 88 and a half, and now we're coming back down under 87 and a quarter again as London opens. There you go, Moran. How you doing? So now, after looking at this chart, is this tradable? Is there an advantage to you doing business here right now? Perfect, Marcus. Perfect. There is no financial advantage to you doing business. Small candles, messy business, slow, right? You were long at 85, you sold it at 87, 88, right, Moran? Perfect. Okay, but right now, there's really there's nothing to do right now, right? So that trade is over. The money is booked. Cool. Okay, Harry, did you understand what I told you about overnight level? Give me a little give me a little feedback. Did the answer make sense to you? Because I'm sitting here anyway. Nice, Brad. Nice. Alrighty. Very quickly, you know when to do business, when not to do business, right? There's no point in doing business if it's just chopping around. There's no edge. There's no opportunity, right? Very important, right? Very, very important when not to do business. There's no use in sitting in a trade for ages with no edge, right? You're just sitting there, you're burning up your cash. What's the point, right? Wait for a better trade. All right, what else is up here? What else? What else? It's a slow news day. All righty. What else is here? What else is going on? Oof. Slow night, slow morning, wherever you are. So as soon as I come in and I see the markets in distribution, the candles are small, the business is slow and messy, right? Don't do business until you see an edge. What was the edge I would look for? I'd look for a look below and fail of 77, 73. But until then, this kind of stuff, you want to like, the only way you could have made money is you have to go position long and then hold it and sell a little bit at every, right? Why does that represent trapped shorts and longs? Oh, good question. I only take look below and fail trades? No, I just like look below and fail trades when I start trading. Rocky, they're the simplest trade and they're based on the business. The look above and fail works great. Like, say you're doing a look above and fail of the previous day high. Say you're short here at 86. Put your stop at 87 and go bid 84. That's a look above and fail, right? I suggest that if you're not consistently profitable, right? Let me put it to you in a very simple way. I'll get to your question in 1 second, George, right? If you are consistently profitable, right? If you are consistently profitable, then you can try shorting, right? If you are not consistently profitable, you have no right shorting. Harry, I'm not going to answer your questions anymore until you start talking to me. You ask a question and then you don't even tell me whether the answer helps you, and then you come and ask another question. So no more questions, Harry. Okay? Right? Are you the Malacca who's in my room? The surgeon? If you aren't smarten up, if you're not smarten up anyway, right? Fucking annoying. Excuse me. All right, George. Single Prince. Okay. All right. Thank you. Was that so hard? Jesus H. Christ on a popsicle stick. A simple yes. Make me work for the answer like a dog begging for a bone. Good Lord. All right. Signal Prince. George, do you see this? Do you see what this period took, what this half hour bar took the low of A, right? Okay. What happened was anybody who was long above 77.95, right? If you were long over 77.95, look at all of this volume. Those are trapped logs. See, look at all this volume. So what happens is when the market gets back up to those signal prints, it hits traffic. You see that? See how we came into the signal prints, stopped cold, and went right back down? So that is trapped supply. These people are all sitting there, and even if they flushed out, there will be dealer inventory in there that will sell, right? So Rocky, if you're not consistently profitable, right? If you're not consistently profitable, you should not be shorting. Stick to the look below and fail because markets are based on going long, right? Why are markets based on going long? Because if I came and told you to invest 5 grand in something and you're going to owe 200 grand in 5 years, you wouldn't go for it. It's not a great business model. Markets are meant to get people long. That's why the look below and fail works, especially in a market that has anyone. The look below and fail is a trade based off of lack of supply. So in a market that has limited supply, that trade's going to work a lot better than a short. Not to say that shorting doesn't work at the right time, right? So Rocky, if I told you I have a student who makes close to 100 grand every month and only does the look below and fail. He trades for a couple of hours a day. He makes 2 to 4 grand a day consistently. Sometimes 5, sometimes 20, sometimes 30 grand. His worst month, he'll have a maybe $2,000 loss against earnings of 80 to $100,000. Is that something that would interest you? You know, he's not sitting in front of his computer for 18 hours a day. He makes his money and then he goes and enjoys his life. And he's not trying to get the latest short. He's not trying to get, you know, trading just ES, nothing else. Yeah, Sergio, like real trading is like about making real money, my friend. Yeah, right. What I do is I try and teach you guys how to make 30, like 50, 100, $200 a day and keep it, right? But if you can't do that, how the hell are you going to make 100 grand a month? You have to build your discipline, you have to build your skill, right? But there's no way in hell you're going to do that if you can't follow simple directions. And if you can't make $100 a day for 3 to 6 months and actually keep that money, there's no way in hell you're going to make 100 grand a month. Hey, John, how you doing? How's Hawaii? Right? And that's what we do at Trading Syndicate. So whether you know what you're doing and you want to scale up, you want to level up your trading and make more, or if you've never made any money trading in this market, come see us at Trading Syndicate. We'll teach you how to, we'll teach you how to make money. Without all this BS, right? No BS. right? Liverpool is amazing, John. We haven't had any rain in 6 months. You know, you know, you guys all want financial freedom. Come get it. I'll teach you how to do it. All you have to be able to do is follow simple directions, which, dear God, is harder than it seems in this day and age. But all you have to do is to be able to follow directions, draw a straight line, and pay attention. Right? That's what you need to be able to do to be a successful retail trader. You just have to be able to follow instruction and to be able to focus, right? It's a tough thing to do in this day and age, right? Nobody can follow directions and nobody can focus. And that's why nobody makes any money, right? Because they're all focusing on different things, or they're like, oh, this is slow. I'm going to go trade NASDAQ. Oh, crap, I got blown out. Oh, this is slow. I'm going to try this new thing. Oh, that didn't work. Oh, this didn't work. Oh, that didn't work. They don't understand the business and they don't understand when not to do business. Like right now, this is not a good time to do business. We're in distribution. What you want to do is we're going back and forth over Friday's high, and we're distributing all the cheap stuff from Friday and the days before. We're still in distribution. So wait for a better time to do business. Real simple, right? Really, really simple. Hey, nice work, AZS. Cool. Give me a couple of days, AZS, so I could get rid of this cold, and then you'll have my full attention on that stuff, okay? Look how small the candles are. There's nothing to do here. So go chill out. Come back in a few hours and see if there's a better setup. Do I have expected targets for RTH? I'm looking for inventory to correct lower, right? If our guns, if we don't get in RTH, as we get closer to RTH, if we accept over 77.87, right? If we can't stay under 87, you're going to get this, okay? Because there's no inventory left, right? I take the LBF of balance zones, previous day low, overnight low. That's it. Now, some people get cute and they take look below and fails of the close of this, of that, of everything. I like to take trades where I'm going to get the most order flow, where I'm going to get the most reaction. Those best trades are the look below and fail of the previous day low, of the overnight low, and then of my zones, because I know that you're at a deep discount, right? Think of it as a discount, Rocky, right? Where am I going to get the best deal on the look below and fail? The best trades happen at the best discount, right? Think about it. You don't want to buy a bunch of cars to flip. You want to buy them at the cheapest possible price so your profit margin is going to be greater. So if you have to discount it, you can. Do you understand what I'm saying? If I'm buying something, if I'm buying 1,000 contracts, like say at $2, and the market goes all the way up to 6, 7, I can sell it all the way back down to 2.5 and still make money. But if I'm buying it at 5 and it goes to 6, 7, then my margin of profit is not as much. Right? Simple stuff. And this is what nobody ever talks about in trading. They don't talk about the simplicity of inventory and cost basis. And here's the rule that you guys should never forget. He who has the lowest cost basis has already won. And those who have the lowest cost basis product set the price, right? So the sellers actually set the price in markets, depending on whether or not there are buyers or not. If there are lots of buyers, prices go up because the sellers will raise the price to take advantage of it. This is capitalism. If buyers start leaving the store, sellers will put it on sale to capture the buying, right? This is not rocket science. Your trades are based on those concepts. If you understand those concepts, excuse me, man, this cold is nuts. If you understand those concepts, then you can trade intelligently. The problem is execution. And that's why you want to keep your analysis simple so your execution, you can focus on your execution and put your energy into execution. Yeah, John, large institutions, like when I'm working an order, say you gave me an order to buy 1 million shares of ABCD stock. I'm going to try and get you prices below VWAP, right? So you call me tomorrow and give me another trade. If you tell me to sell 1 million shares of a stock, I'm going to try and get you prices higher than VWAP. Because I'm a trader, then you're going to give me more business tomorrow because I'm a trader who can give you better prices. And thank you for bringing up VWAP because I didn't even put it on my chart this morning. Sorry about that. Let me go set VWAP. I don't even have it on the chart here. Good reminder. I could tell everybody else has weekend brain because nobody even mentioned it. Yeah. Most people are like, hey, JJ, you forgot to put VWAP on the chart. Yeah, there it is. Right? It's harder to do that for retail, John. That's why I say just use the levels, right? Like right now, VWAP is completely useless to you as a trader because it's 77.78. We're trading 77.86. So there is no way for you to capitalize or take a trade off of it, right? If VWAP is nice and flat, sometimes you can do the look below and fail of VWAP. But I would, the problem is VWAP is not a fixed reference. That's why I liked fixed references because they tell you a little bit better what kind of order flow is there. Look at that. Look at that. Very interesting, folks. Look. We found bids under 87, and we're back into the single prints, George. Look, we ran out of supply. So now we're going into the supply cabinet here where this red box is because we ran out of supply underneath 91, 92. Let's see if we hit resistance and fall back down here. Oof. We'll have an execution class on Wednesday at 11. It will be recorded. Okay. Whether I'm sick or not, we'll have a class. Well, that's a good thing. See, you didn't think it would run like that, Ian. Nobody knew that it was going to run like that until it did. So what is that? What you do now is in your trading journal, you write down that there's a very, very, very significant bid here. So at 3 in the morning in New York, bids at 84. So how does that help you? Say later on the market gets a little starts going on sale, right? And you take a short. Well, when you go short, when you get to 84, 85, that's where you're going to be looking to cover. See what I mean? So that's why you mark that level because there were bids there. There should be bids there again. And you can use that information for intelligence when you get back down there. Make sense? A lot of times you're going to miss a move or you're not going to fully take advantage of a move, right? But there is still information that move teaches us that you can use in your next business transactions, i.e. trade, right? And we still have inventory at 92, right? There's still traffic at 92. I think we're just going to go sideways between 87 and 92 here until we move that point of control up. So if you're looking for a longer term short, wait till we move these 1100 contracts up here and then maybe we'll get a sale. If we don't, then be careful shorting, right? When the market doesn't do what we expect, it's trying to tell us that there's something that has changed in the business. Okay? It's trying to give us a warning, a lookout. Hey, buddy, psst, 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 don't do this. It's like Damon Pavlotis when he was on our podcast. He was executing trader for Paul Tudor Jones. Sometimes at the end of the day, he had these massive buy orders, right? Like, buy 10, 15,000 contracts at the end of the day. And his buddies would be going, I'm going to short the close. And he couldn't tell them not to. He would just go, maybe you should just go home. That's the market trying to say, look, right? If I'm short and it can't break 90, the market should just kind of going, maybe you should just go home. Take your short and go home. Close it off because there's buyers here. Pay attention to the chart. If you pay attention to the chart, it'll make your life so much easier. Right? Just pay attention to the chart. The chart will tell you where they're selling and where they stop selling, and that's all you need to know. Right? Thanks, Raj. We will see you guys in RTH at 9:15. Whew. Have a great morning. And folks on YouTube, if you want to learn how to make money and not pull your hair out, come visit us at tradingsyndicate.org. Thanks, everyone. Bye for now.